Just a few words for those of you who don't know much about the Hassenfeld Institute. The Hassenfeld Institute was established in 2010 with a generous gift from the Hassenfeld Family Foundation. The mission of the Hassenfeld Institute is to provide public officials with the tools and the skills they need to be effective leaders so that they can make more informed decisions and they can manage diverse and responsive organizations effectively and efficiently. In the 8 or 9 years that the Institute's been in existence, most state and local government organizations in Rhode Island have participated in our programs, our workshops, and the various facilitations that our faculty is engaged with. Last year alone, there were about 1,000 public officials who attended programs from the Institute, which are all customized to meet the needs of the community or the officials in the community. But tonight marks a new beginning, for the Institute and a new initiative. This is the first public forum that we're involved in sponsoring, and it's a public forum that will use the case studies that we prepare to help educate the broader public and citizens about leadership. And I think as you listen to the discussion tonight about leadership, there are 3 characteristics that will come through. That leaders must assume responsibility for pivotal decisions, and that clearly was done by the governor at the time, without fear. That leaders transcend personal vendettas, and I don't have to say a lot about some of the rhetoric that comes out of Washington these days to indicate how harmful personal vendettas can be for any kind of effective leader. Leaders are inclusive and reach compromises, and I can tell you a lot of compromises were reached as the state worked its way out of the banking crisis. And then leadership's about people. Ronald Reagan used to say personnel is policy. That was an important aspect of it. So tonight we have a unique opportunity to bring the public and public officials together for a discussion of a major event that had profound impact on the state of Rhode Island and in many ways continues to have a profound impact. Many of us lived through the credit union crisis 27 years ago, and what we learned from this tragedy, and it was a tragedy for many, many Rhode Islanders, too many Rhode Islanders, and how it applies to government today, some of the things I hope come through this forum and this panel tonight. We encourage participation and discussion. That's really important, the way our programs are delivered. So without further ado, let us begin by looking at our new documentary on this crisis. Before I do, I want to recognize 2 people in the room with us tonight who were directly involved. The former Attorney General, Arlene Violet. Where are you, Arlene? There you are. And my good friend and comrade, Dave Preston, who served as Governor Sumlin's communication director. That was his first job, to communicate this crisis. David? Okay. With that, why don't we begin the presentation.
Rhode Island share in Deposit Indemnity Corporation. Our commitment to protecting your savings is carved in stone.
Well, the human impact was just terrible. People had their life savings all frozen. Perhaps the hardest hit group of all were all the so-called little guys and little gals who had businesses.
So there was a lot of anger on the part of the depositors, almost all of it justified. And there was a lot of fear, too. I mean, you go to your ATM at your credit union and it doesn't work. And your checkbook doesn't work either. You can't write checks because your money is frozen.
What happened with RISDIC is that the presidents of the various financial institutions were controlling RISDIC. And RISDIC was supposed to be examining those institutions for safety and soundness. That created a basic conflict of interest. When some of the institutions started to fall on hard times, when loans went out that shouldn't have gone out, when crimes were committed that shouldn't have been committed, and the financial institutions started to become shaky, RISDIC covered over and did not do an adequate job in examining the banks to expose their true financial situation so something could be done about it. Because they covered it over, the situation continued and got worse.
I would say that the situation was as bleak a public situation as I have ever seen, long-lasting, with enormous amounts of pain and suffering and uncertainty and loss over months. It's not like you had a bad day. This is you had a bad half a year. And the whole state had that bad half a year. And what Governor Sondland did was try to use that to fix as many things as possible. And he had the courage to do that, and he had the vision to do it, and he had the determination to do it. It didn't always make him popular.
When I became Attorney General, my first role was to establish a white-collar crime unit. So the unit began with state police on it, law enforcement from some of the municipalities. I hired Bob Stitt, who was a retired Wall Street lawyer who had done a lot of work in the banking industry, Charlie Black, who was on loan from the IRS, and other people who had served in a variety of capacities. Even when I looked at those credit unions themselves, even if I just looked at the four walls, they didn't seem capable, really, of sustaining the kinds of loans that, in fact, they were giving. They were not asking for any personal guarantees from the people who were borrowing the money. They were actually giving it to a corporation that could go belly up tomorrow. And nor did they have any other collateral. These loans were being given for the purpose of building something, but if they ran out of money, you'd have like a half a building, which was hardly a good collateral for the loans. I sat down with Bob Stitt and Charlie Black and said, am I missing something here? Take a look at this. And what's wrong with this? So at that point, we'll find out for your boss. They came to the meetings, they started studying it, and eventually it led to the Stitt report. RISDIC, of course, was the Rhode Island Share Indemnity Corporation. They were the equivalent of what the FDIC is under federal law. What they're supposed to do is, if there was a credit union failure, they were supposed to have enough money in the pot that they could come forward and make sure that the depositors were repaid, at least their principal that were on deposit at that particular credit union. As we began to study this, RISDIC certainly did not have the money. They also were advertising at that time, which was somewhat misleading. Cast in stone, your money is protected. They couldn't protect one of any of those 5 credit unions that we were looking at, let alone if all of them potentially failed. And we had lots of reasons to believe that those individual credit unions were on the cusp of failure. Well, the first people that we wanted to present this to was the governor, because we felt it was critically important that we have his support. We were also very concerned that any of the information would be leaked to the public, because if the public got any inkling that any one of these financial institutions were having solvency problems, that in and of itself could cause a run on these credit unions. People would start withdrawing their money, and bingo, there would be a collapse of any one of these credit unions. I felt that the governor did not really take it to hot. To me, I don't think it was just coincidence that they were campaign contributors to the governor as well as the leaders in the General Assembly.
I think the point is well taken, Bob, that if the withdrawals proceed and accelerate, there will come a point in time where there is no liquidity.
I would also submit that there are 13 or 14 extremely well-run private insurers in this country, and that RISDIC, in fact, leads the nation with the kind of deposit insurance and the kind of protection and the kind of leadership that they have provided over the years. I'm rather not go on because I think others are going to make that point. I hate to be.
Okay, Bob, just to point out, I'm not questioning RISDIC and its ability. However, the one underlying thing that fundamentally bothers me is whenever the fox is left to guard the hen house. You must admit that most of it, not most, I think all of the members or many of the members of the RISDIC board are also serving in some capacity with the credit union.
We may, in fact, be seeking a solution that, in fact, that denies us of a very favorable available resource.
But isn't the issue not how many options you have, but how many viable options you have? All Representative Gashin's bill is stating is that when you have a situation where a private insurer who has available $25 million, and they in fact have outstanding risk of $1.2 billion, when you have that on the one hand...
I understand those figures, and I've been asking for... He said that the ratio was the same entire nationwide.
But sir, the difference is that if there is an excessive demand, which is the word of art, on a given institution...
And that's taking care of lines of credit, just like we go across the state line for lines of credit every day in the week.
Because the line of credit, sir, except for $400,000, must be secured by tangible assets.
People knew this was coming. Bob Stitt had written a report. The Attorney General's office had received it. That report had gone up to the General Assembly, and the Speaker and other people had been provided this information. And it was all very well established. If you went down to the Department of Business Regulation to ask the examiners, they would kind of reluctantly say, oh yeah, it is that bad. So this was a known thing, but because the players involved were politically connected, friends of people, and for other illegitimate reasons, the political system didn't react. It just, I don't know what they were thinking, that this was going to go away. I think with Governor DePrete, he was thinking, well, I'm at the end of my tenure, let this be somebody else's problem, showing us nothing but the taillights on his Winnebago. For the legislative leadership, a lot of them got thrown out by the voters in the next election. I don't know what they were thinking, not taking this on.
And it always struck me as to why couldn't the politicians see this? The pain was palpable. And how did we get to a point where your own self-interest blinds you to other people and their need for compassion and their need for you to take action? I was just hoping against hope that the care and concern for those depositors would supersede this incestuousness between the folks who were the political insiders. Regrettably, it did not.
So we did not anticipate the collapse. It wasn't until about Thanksgiving of 1990 that this issue started to get up on our radar screen. The big issue at the time was resolving what we knew was going to be a major budget deficit. And so we were focused on that primarily. The governor also had a very ambitious public works program and a very ambitious agenda. He was a Franklin Roosevelt Democrat. and the economy was in a downturn, and he had to learn from President Roosevelt that the best way to put people back to work was to put them to work building things. And so that was what we were primarily focused on.
And somebody called in and said, hey, these guys from RISD and Rhode want to come in and see you. They've got a concern that there may be a public relations problem. And in came these two guys, one from RISD and one from Rhode, and they had this story to tell about how there might be some misunderstandings and we might have to, count on everybody's discretion about the problems and that everything was going to be fine, but we couldn't be rash about what we said about any of this and so forth. And it all stank. It all had a really bad odor. It was completely obvious that something very bad was hidden under all of this, and I went immediately to Governor Sondland and to the more senior members of his team and said, I don't know exactly what's going on here, but we've got something very, very sketchy, and it could be very, very bad.
So we had an ambitious 100-day strategy, and when this broke, the credit union crisis consumed the 100-day strategy. And dealing with this in a constructive way, in a productive way, became the 100-day strategy. So we had to figure out a way to resolve this, and at the same time, we had to solve the largest budget crisis on a percentage basis in the United States.
A new governor comes into office with a whole slate of ideas and initiatives that they want to accomplish, full of optimism and enthusiasm about accomplishing their goals, and then pow, this thing hit, and it was so much bigger than anything else. It just completely dominated the politics, the news, people's conversation, the state's emotion. It was like a knockdown slam in a windstorm. And this was actually Inauguration Day. And I'd been up basically the whole night at the local law firm that was helping us with the legal work, preparing the papers to close the credit unions. Because the day before, the chairman of RISD had called me and said, we have just put ourselves into receivership. We have just gone out of business. As soon as businesses open the next business day, they'll be uninsured. They'll have no coverage. And basically, we pulled the plug.
We turn now to the story of what happens when a bank's insurance system fails. Last week, government regulators warned that the federal bank insurance fund could run out of money by the end of the year unless something's done to build it up. These days, anyone looking for an extreme example of what happens when a deposit insurance system falls apart need look no further than the state of Rhode Island. Business correspondent Paul Salmon did that and has this report.
Today, now, on behalf of all the depositors, especially the small depositors, I am declaring a bank emergency in Rhode Island.
On New Year's Day, Rhode Island woke up to this announcement. The state's bank insurance fund was broke.
And I can remember right before the inauguration at the governor's house on Benefit Street, the people going by on the street below, there were well-wishers coming to see them. There were crowds going by. It was kind of a celebratory night. People were happy. The night was full of light and laughter and conversation and voices and footfalls, and it was a wonderfully happy scene of bodies and people and cheerfulness. And there were probably a dozen of us who knew what was going to happen. And it was the eeriest feeling to look out at all that joy and all that happiness and know that in a couple of days, the state was going to be turned upside down.
For angry depositors, frustration reaches an all-time high. They want their money back, and they want it back yesterday.
case where a gentleman sank every penny he had into opening up a restaurant, and he needed that last bit of money out of his credit union to buy the plates and the knives and the forks. But he couldn't get the money. So he couldn't then pay, quote unquote, the nut on the loan that he had gotten to open up this restaurant, and he eventually had to file bankruptcy. To me, it was so obvious the pain that the depositors were in, because this crisis hurt them to the nth degree. Some committed suicide. They lost their businesses. They didn't know where their savings were going to come to them so they could have a modicum of retirement.
Good evening, everyone. I'm Ken Malloy. We begin with what is perhaps the largest and most vocal protest yet by depositors who want their money freed up from closed credit unions. Thousands upon thousands of them took to the streets in Providence today, marching, protesting, yelling, and at one point burning an effigy of Governor Bruce Sunland. News Watch 10's Jody Kennedy has more.
It was one of the biggest turnouts, which began with a pledge.
For the sake of our children, our grandchildren, and our great-grandchildren, we will never give up the fight until we get all of our money.
A public leader faced with the kind of group fury that Governor Sunland experienced, has some choices themselves. And what Governor Sunland did that I think was a lesson to all of us was, first, he was willing to let people have at him. He didn't hide. He had town hall after town hall. A lot of the town halls were initially called Dome on the Rome, Capitol Dome on the Rome. And of course, the staff quickly called them Bruce on the Loose. But he would go and he would be yelled at. And I think he understood that when people are really upset, sometimes they need to yell for a bit. And if you're patient with them when the yelling's done, then you can begin to have the conversation that they need.
And the meetings all had a very, very similar dynamic. I mean, it was uncanny how there was almost a script for these things. And in the first hour, it was just rage. It was anger. It was that special kind of rage when you're angry, but you're also afraid too.
Ladies and gentlemen, the governor of the state of Rhode Island, the Honorable Bruce Sunland.
If you're scared off by their yelling, then you never get to that conversation. And one of your roles as a public citizen, a public leader, is when a citizen has been hurt and is suffering, you need to hear them through their anger and then see what you can do. But if you haven't heard it first and aren't willing to sit there and be yelled at for a while, you have a little bit defected on your job. So he was totally willing to do that.
I have never run away from a meeting in my life. I don't intend to run away from this one.
Just because your adversary, who appears to be your adversary, is red hot mad, is no reason not to engage. You've got to let them have their anger. They earned it by being screwed. And now they are entitled to yell at you as the governor. And your job is to sit there and take it and get through it and then work to try to solve their problem. And the second is, you can't let it affect your judgment. You can't let whether somebody's being nice to you or mad at you affect the substance of the decisions that you have to make to try to make it right.
Public leaders in Rhode Island did many, many things that were correct and actually very helped resolve the problem once the problem was identified. First, you had the willingness to ask for help. and there was a direct line that went up to the FDIC, to the Fed, to the National Credit Union Administration, seeking help in a proactive way to stem the what everyone was afraid would be riots and disasters of people demanding their money, and if they couldn't get their money, then you would have a complete and total collapse. In 1991, I was the Federal Deposit Insurance Corporation's Assistant Director in charge of investigating the causes of every bank failure in the U.S. And after that, I transitioned to handling 3 of the largest financial institution failures in the country that needed my special attention. In 1993, I got a call from a fellow named Dick Gaskell. Dick was a former FDIC official and had been tasked with heading up Rhode Island's DEPCO, the Depositors Corporation, that was charged with cleaning up the credit union crisis here in Rhode Island. Dick asked me if I would come up and help with the specialized investigations required for professional liability investigations, officers and directors, accountants, lawyers, and special service providers. The DEPCO situation had a lot in common with other bank failures, credit union failures, and savings and loan failures throughout the country. Basically, what you had in almost every situation was a convergence of a declining economy, but the institution generally was pushed over the edge by negligent operations and, in many cases, fraud, criminal activity, and in some instances, organized crime. So there was nothing different that went on here in Rhode Island and the credit unions than happened everywhere throughout the country, with one exception, and that was Rhode Island's unique deposit insurance situation. RISDIC was the state insurer, and you did not have a state insurer in everywhere else in the country. FDIC took care of that. Joe Mollicone was the poster child for the Rhode Island deposit insurance crisis. Actually, his institution, Heritage, was a very, very small player. And if Heritage had failed and the system in Rhode Island was sound, there would not have been a crisis. Joe Mollicone was an individual who owned Heritage Savings and Loan, and he inherited that actually from his father, so it was a family institution. The difference between Joe Mollicone and his father, Puppy Dog Mollicone, is that loans that Puppy Dog made were paid back and loans that Joe made were not. And when a loan isn't paid back, you see where that goes, and the institution failed. At the same time, Joe was trying to keep it quiet, trying to keep a lid on everything, and his flair for the dramatic was just what the newspapers wanted. He disappeared from sight the day after his daughter's wedding. No one knew where he went, and when people started to look into what was going on, they discovered that Heritage was basically insolvent. But again, Heritage was a small player in the RISDIC system. If many, many other institutions had not been on the brink of failure, Heritage would have caused nothing. The other human element there is that you had service providers to the banks, and people depended on those service providers, such as the accountants. You had one accounting firm supposedly looking and checking at the financial statements of RISDIC, and at the same time they were supposedly looking and checking at the financial statements of the major players in the RISDIC system. Those financial statements were misstated. In addition to that, you had lawyers who were providing services to the institutions, who again were profiting in a very direct way. And you also had appraisers. Appraisers would go and look at a property, and if they were supposed to appraise a house for a loan and they didn't indicate that that same house had been sold back and forth 5 or 6 times in the last 3 months, inflating the price at each sale, that can create a problem. So what you had was an unfortunate convergence of service providers to the institutions, in addition to the officers and directors in the institutions themselves, who were all working towards the same end, and that was covering over a situation, not doing the job that they should have been doing, and keeping the institutions safe and sound. Well, ethics, accountability, and oversight have to start at home if you're a public servant and if you're a public leader. Unfortunately, in Rhode Island in the 80s and before, there was a climate of acceptance of corruption, public corruption, and public officials who ultimately, many of whom were indicted, or public officials who were continuously elected, and everyone knew with a wink and a nod that they weren't conducting the most ethical operations in their positions. So ethics, accountability, and oversight have to start at home. You need politicians who have the courage to maintain an ethical line and who are willing to be proactive to do their job.
If you look backwards at this looming problem and what people knew and what people failed to do, that was a very educational thing, and it was an education that came with a lot of emotion, because we had to clean up this mess, and we had to deal with a lot of people who were suffering a lot, and none of that suffering was necessary if the public leaders at the time had done their jobs in any kind of an honest or responsible way. So how not to do it was a very powerful example from looking back. Looking forward, we had Governor Sondland, who was fearless, dead honest, and willing to empower his staff in remarkable ways. He trusted us, even let us make mistakes, knowing that if we all kind of hunkered in, we were never going to get this done. He had to let us have a little bit of freedom to run and to make mistakes, and then as a team, we'd do better if he led us that way and just kept like the throttle forward on get it done, get it done, get it done. He used to say, how fast would you do it if the Russians were in Attleboro? The staff was very young. I mean, I was 35. A lot of them were younger. And we had this incredible emotional roller coaster ride and incredible, like, just massive, like, crushing for an all-nighter test, only for 4 months in a row, all happening at once. And out of all of that came a sense of loyalty among each other that is still a very profound feeling in my life.
And it was really a testament to the governor's leadership ability in a team-picking perspective, that he was the great general manager. He put folks in a position where they could excel and help make the team become a champion. That really is something I think of the governor every day, some lesson in life or human nature, or some phrase that he said that I learned from and I still apply.
When you have a crisis, you have 2 ways to approach it. Number 1 is problem resolution. Oh, there's a crisis. I'm a government official. Let's clean it up. In this case, the Rhode Island leaders actually did a very good job in conjunction with the federal government. But let's look at the other side of the coin, and that's proactively identifying where are problems coming down the pike so we don't have a crisis and we don't have to clean it up. And unfortunately, that's where we have to be very proactive to, in the context of ethics and accountability, to make sure that everyone is doing their job.
With Governor Sondland's leadership and persistence, and by taking advantage of not just this solution, but looking broadly at other things that were wrong and using this opportunity to begin to move them in the right direction, it was the most consequential year in Rhode Island history, probably since the Dorr Rebellion. And if you look back at that period and evaluate Rhode Island today, you see that enormous amount of what we think of as the baseline of how Rhode Island works, whether it's how we appoint judges, how our workers' compensation system works, how our budget is run, how our banking system works, how our legislature manages financial issues, whether there are hearings. A lot of that came out of the aftermath of this particular crisis.
Public leaders should learn what the expression public servant means. It's all about the public and serving their needs. It shouldn't have anything to do with your own self-aggrandizement, your own self-promotion, your own re-election. You're a public servant. Serve the public by doing what is right. I can only hope that people that are the millennials of today, when they think of public service, that they go back to the original concept, which is you come into government for a certain period of time, you do your darndest to help the public and make this a better place than the way you found it, and then leave. But leave, for heaven's sakes, with empty pockets.
What the average citizen can do to avoid a reprise of the RISDIC situation is express themselves at the ballot box, make their views known, and to not tolerate public corruption or an air of public corruption. One other thing they can do is require their public officials to proactively look, where is the next crisis coming from? What is my generation's crisis going to be? How is it going to manifest itself? Our public leaders are in a position to look for that, but the public has to require them to look for it and to keep their feet to the fire.
Well, there you are, a citizen. You're going on about your life. You have no reason to believe that the bank that your life savings is in isn't sound. You have no reason to believe that the insurance company advertising on the TV how carved in stone it is a sham. And suddenly you find all this out. Where does your faith at that point go?
To be honest with you, I assumed it was insured. I mean, it's on all my bank accounts. There's a big sign on the door, insured, you know, and I never really thought about, you know, I never realized that there was a difference between federally insured or RISDIC, that, you know, it says insured. Insured to me is insured. I mean, I just never expected, you know, anything like that.
And I think over and over again they present us the choice as citizens. Do we lose faith? Do we get angry? Do we say to hell with the system? Or do we say something really bad went wrong there and we need to figure out what went wrong, we need to make sure that doesn't happen again, and kind of own it in that sense, rather than having it encourage us to move away from active citizenship. Make sure that it's a spur to more active citizenship, even in your anger, even in your frustration, even in your disappointment. And if you look around and see that people aren't doing their jobs faithfully, and that there's too much relationship, too much politics, and not enough looking for the horizon and steering a true course, then that's a real problem. And that was the ultimate problem in this case, that the legislature and the people who had a chance to do something about this wouldn't do it because these people who were looting the credit unions and propping up the sham RISDIC outfit were their friends, were their donors, were their political chums, and they simply didn't want to call foul on their own buddies. And that is and ought to be unacceptable.
Regrettably, citizens today have to be the sentinels of democracy. We are all called to public service when you come right down to it, whether you're officially in office or not. I think the citizen of today not only then has to be vigilant, but also should see their responsibility, too, of making this a better world.
Hello again. So thank you for watching our documentary. We haven't done a documentary before, and we did this on a very tight budget, and I have to give thanks to Video and Vision of Newport, who helped us with this, and a special thanks to Arlene Violet and to David Preston, to Senator Whitehouse, and to Chris Byrne, all of whom donated their time in this effort. So on your way in, you may have picked up a copy of the case study that inspired this documentary. And before we go to our panel, I'd like to introduce you to the study's author, Melissa Prosti, who's going to give you an overview of her research and dig into some of the areas that were not handled in the documentary. By the way, I have the privilege of working side by side with Melissa, and she is a really intense scholar. She's got a PhD from Brandeis University in politics. She's been at Bryant for 3 years, producing case studies on local and regional issues. And all I can say is if you ever saw the stacks of folders in her office, they go up to the ceiling. And she is just meticulous, a tremendous attention to detail. We're very lucky to have her on our team. Our case studies also are available for free download on our website, and so they're wonderful teaching tools. And so, ladies and gentlemen, I introduce you to Melissa Prosti, my colleague and friend.
Good evening. Good evening. Thank you very much, Cindy, for that really lovely introduction. I hope that you all are having a pleasant evening here so far. And I also see that time is flying past us. So I will probably fly through a few of these slides, but hopefully this will give you some of a taste of some more of the issues that were encountered during this crisis. So in the video that you just watched, you saw some of the key players provide an overview of the circumstances leading up to the crisis, as well as responses once the crisis took hold. And what I want to do in this presentation is hone in on state-federal relations over the course of this tremendous crisis. You'll see that this was a really complicated situation. And before I get started, I just want to take us briefly back in time to right before the crisis broke. Specifically, December 31st, 1990, and January 1, 1991. And this will help us to understand just how little was understood in the time period leading up to this. So on December 31st, the final day that Governor DePrete was in office, the Providence Journal wrote a very positive editorial reflecting on his tenure in office. And basically what it said was, previously, Rhode Island had a reputation as being anti-business. And what DePrete's policies helped to do was to instill better activity, enhance the reputation of the state, and that they felt that overall he had done a pretty good job as governor. The next day, Governor Sondland would close down 45 financial institutions. But of course, this wouldn't be reported in the papers until January 2nd. If you were tuned in to the papers on January 1st, you would see this article, if you kept reading to C3 of the paper, that Rhode Island Central received a very large loan. And it was not immediately clear to members of the public why this credit union would need such a large loan. The outgoing director of business regulation at the time said that it was not uncommon for a credit union to enter into such a loan in order to handle the temporary liquidity needs. But looking back on it, we now understand just how much trouble this institution was in. So for a brief timeline of the crisis, December 31st, 1990, we have RISDIC dissolves. The next day is the bank holiday. February 1st, 27 institutions reopen, but this represents only a small proportion of the frozen assets. And then June 30th, 1992, by this point, all remaining depositors had received the majority of their funds. So it took a really long time to resolve this, and a lot happened during this time period. This crisis had a lot of elements. At the center, you had the state government grappling with a calamity of truly historic proportions. And under the leadership of Governor Sondland, there was an administration that was forced to make this a top priority. As Sondland repeatedly noted, he sought to get money back into the hands of depositors as quickly as possible. And his administration reached out to federal officials, including members of Congress and federal agencies, including the FDIC, the NCUA, and the Office of Thrift Supervision. Financial institutions grappled with their own tenuous existence, how to move forward given the multitude of problems in their own institutions. And then you had the federally insured institutions that were looking at ways to take over these troubled institutions. You have professional services, including lawyers, consultants, and accountants that served as important players. There were ones that were to serve oversight roles and failed. And then you had the ones who came in order to help clean up the crisis. Local governments grappled with decreased tax receipts. There were school departments that had money tied up in closed credit unions. And then you had everyday citizens writing to their elected officials, protesting in the streets, as you saw in the video, demanding why they couldn't get access to their funds. Finally on here, I have local businesses. These were the ones who struggled to take care of basic services, make payroll, pay their vendors. So a lot going on here. And what I do in this case study is focus in on the state-federal piece of the crisis. And so before I get into these actions, I just want to give you a little bit of information about the research process. Rhode Island State Archives, downtown Providence. I spent time there going through their DEPCO records specifically. It's the official repository for Rhode Island state government records. And then the URI special collections. And while there, I spent time with Governor Sondland's papers as well as Senator Chaffee's papers. And just a note about research, a lot of times when you talk to folks about research, it involves entering some text in a box and clicking search. A lot of this information, it's not something that you're gonna find online. You have to physically go to a location and get your hands dirty with a lot of materials. And this is something that I got to experience while doing research for this project. So I'll just show you some of the interesting things that I came across while researching this. Here's an original copy of a letter from the former president. And in this here, he's praising Governor Sondland for his efforts. This is a memo from the Office of Constituent Affairs. And the part of the memo that's not shown here is indicating that callers were bombarding the office with lots of questions, and folks felt like they didn't have enough information. And so what this says on the memo is, please, Governor, I know you have a busy schedule, but I think it is important for you to make a stop at the hotline and at constituent services to acknowledge the efforts of our hotline workers. The work is very demanding, and they are taking the brunt of thousands of angry callers, and for the most part, leaving them with a caring, pleasant, and overall good impression of this administration. Here's some handwritten notes from Senator Chaffee. This was before a protest at Marquette Credit Union. It was the largest of the closed credit unions with $331.7 million in deposits. At the conclusion of his speech, he said, "You have known me for 30 years. You know my style. I will not make pleasing promises that I can't keep. I will continue to work extremely hard to resolve this tragic situation, to see that you get your money back as soon as possible." So state-federal relations during this crisis had a lot of elements to it. Among them, filing taxes, one of the most immediate concerns that folks had in the state. The U.S. Treasury loan, because there was no way for the state of Rhode Island on its own to be able to clean up this mess. Examinations of troubled financial institutions. This is where the NCUA and the FDIC came into play. The attempted Old Stone deal and the Northeast deal. And what you can see is that these were not all discrete events. Everything was happening at the same time, which helped to contribute to a really complicated situation. So with filing taxes, there were lots of questions that the IRS was bombarded with. And here's just an example of a couple of questions that the agency answered. So yes, credit unions were supposed to send out 1099s. And yes, folks did have to pay taxes on interests in closed credit unions. In the event that they didn't receive these forms, they were to make estimates based on the best information that they had available. The Treasury loan was a very long process, and it started with this legislation, January 3rd, 1991. These were amendments to these bills. That was the House, this is the Senate. There was a Senate committee hearing, and while the focus of the hearing was on the Resolution Trust Corporation, the committee did set aside time to talk about the RISDA collapse. April 17th, 1991, there was the House subcommittee hearing, and Governor Sondland, along with members of the Rhode Island congressional delegation, spoke very eloquently before the committee. There were many heartfelt statements made at that hearing, and just one of the examples that I'd like to point out was from then Representative Jack Reed. He said, "What may have sent tremors through larger states," and here he's referring to previous crises that took place in Ohio and Maryland, "sent paralyzing shockwaves through Rhode Island. We are here today for two reasons. First, because the federal government and the Congress must recognize the economic and human impact of the crisis. And second, we are here because the citizens of Rhode Island demand and require that their governments, federal and state, cooperate sincerely and creatively to ease their pain. The technicalities of the dual banking system, the relative sovereignties of state and federal governments, and the bureaucratic lines of authority of regulatory agencies are of little interest and to date small comfort to thousands of Rhode Islanders struggling to reclaim their deposits. Today's hearing is an opportunity to search for a solution and should not be a ritual of recrimination. And members of Congress who served on that committee expressed a wide variety of sentiment. Representative Hubbard expressed both sympathy and a lack of clarity about what the federal response should be. And just in case you were wondering if corruption was confined to the state of Rhode Island at the time, it was not. Representative Hubbard did spend time in prison from 95 to 1997 for federal election violations. McCandless took a problem-solving approach, looking to consider how future crises should be dealt with. And Annunzio was more skeptical. He was worried about what the implications were for helping out a state in which institutions violated the rules versus other institutions that had abided by the regulations in order to receive federal insurance in the first place. So just quickly going through the timeline, May 24th, there was a field hearing at CCRI. Amendments, House bill fails, Senate bill passes. Finally, it took until December 19th, almost a year later, that the Bush administration signed off on this federal loan. This money, it was used to fund what became DEPCO. And DEPCO received funding from several sources. So among these, the U.S. Treasury loan, the money that came out of the state sales tax, and then there were the settlements that took place. So the most notable settlement being Ernst & Young settled with the state for its lack of oversight in the amount of $103 million, which was an absolutely extraordinary amount of money for the time. In addition to the Treasury loan, there were all these other examples of legislation that members of Congress proposed. None of them got out of committee. They all failed. This was a crisis, and they were just trying to do anything possible to assist the citizens of Rhode Island. So they proposed legislation targeting small business, extending the time on taxes, amending the Higher Education Act for aid calculations, and amending the IRS code for the rollover period on principal residences. This continued even after the loan came through. There were additionals. So thinking about the exams for the troubled financial institutions, there were several notable examples of NCUA exams where they pointed out the weaknesses of particular institutions. So in the case of the Rhode Island Central Credit Union, the Projo article that had come out from January 1st, what wasn't mentioned in the article was that the previous October, there had been an effort on the part of the institution to gain federal insurance. And among the items that were cited in this report were the nature of the loans, the lack of liquidity, and poor management practices. Here's what the examiner wrote in that report. Our review of your loan portfolio indicated a lack of fundamental underwriting techniques. You have no funds available to meet membership demands. Any run by the members would place the credit union in a very serious borrowing position. You have no funds management policies, and your practices are poor. You have what can be called a form of savings and loan disease. It is extremely critical that you learn the necessities of a funds management program and how to match the sources and uses of funds. So that sounds really promising, right? And Rhode Island Central was hardly alone in these troubling assessments. This photo here, this is outside Marquette Credit Union. And basically what NCUA pointed out in that report was the lack of capital adequacy, the asset quality, earnings, liquidity, and loan practices. Here's an excerpt of a report from the Providence Teachers Credit Union. And you can see that the examiner wrote, should we suspend reviewing this credit union? Are we wasting our time and their money? And what this meant in the context of the report was that it was so obvious to the examiner that this was such a poorly run credit union that they thought it was just a waste of time to proceed further with this examination. So understanding all the problems that these credit unions were dealing with helps to make you understand how acquiring them could become so difficult. And this is where we get to the Old Stone deal. So this was an attempt to take over what was originally 6 institutions. And what Governor Sondland said was institutions had 3 choices. They could either attempt to get FDIC insurance, they could merge with a federally insured credit union, or they could get taken over by DEPCO. And in this case, this was an attempt to get taken over by Old Stone, which was based in Providence and was a federally insured institution. This was a really, really drawn-out affair. The nature of the deal changed over a 9-month period, and it led to a lot of confusion. You had a lot of federal institutions that were involved in this process. So the FDIC had to provide examinations for the institutions that were going to be part of this deal. The Office of Thrift Supervision had regulatory authority over this deal, and the folks in charge at OTS were particularly concerned that the problems of Rhode Island were going to spread into the federal system by having this institution take over. Members of the Rhode Island delegation wanted to keep this deal alive. And of course, Governor Sondland and members of his administration worked to try to keep this deal in play. And finally, the IRS was involved in monitoring the final details of this transaction. So at the congressional hearings, you did have officials talking about the Treasury loan, and then you also had officials talking about the Old Stone deal. And this was a quote that I liked from Governor Sondland when he was describing his disgust with federal regulators. He said, "I knew Rhode Island was the smallest of the 50 states, but it was not until I dealt with the federal regulators that I found out that Rhode Island was too small to survive." He was really frustrated with these folks. And John Downey from the Office of Thrift Supervision also expressed his own hesitation and the roles and responsibilities. All right, so the Old Stone deal, it never happened, but officials were able to use the attempt at this deal as a blueprint for making the Northeast deal happen. And here you have a large constellation of entities at federal and state levels to help get the Northeast deal off the ground. And that allowed for 4 institutions to eventually become acquired by Northeast. So in summary, It was really an amazing thing that depositors all got their money back at the end of the day, even with all the pain that was experienced by folks. Rhode Island institutions are required to maintain federal insurance. That is something that remains on the books to this day. That was signed by Governor Sondland's successor, Governor Almond. For those of you who were touched by the crisis or know others that were touched by the crisis, we would love to hear your stories. It's really important for understanding Rhode Island history that we have an accounting of these matters all these years later. And I just want to close with a quote from Governor Sondland. This is when he was announcing the formation of the RISDIC Commission for investigating the crisis. He said, "Today we start the process of bringing this sad, sordid episode of Rhode Island history to its just and rightful conclusion. The havoc the RISDIC collapse has wreaked on our state and the lives it has disrupted make it a calamity equal to our worst hurricanes and blizzards. But the RISDIC affair is much more tragic than those events because RISDIC was man-made, and being man-made, it was preventable. In this instance, an atmosphere of irresponsibility, naked greed, and a casual standard of political ethics proved a volatile and disastrous mix." Thank you very much for your attention.
Okay, this is a really great moment now where I get to invite our panel up. We have an amazing panel. Come on up, everybody. I'm going to introduce you as you come forward. Just a testament to the kind of talent and wisdom we have right here in Rhode Island. So, John Kostreva, wave your hand. Yeah. He's a familiar face to anyone who subscribes to the Providence Journal, as I strongly recommend you do. He logged 29 years with the Journal over his 45-year career in journalism, and he served as a business writer, business editor, columnist, assistant managing editor. In 1991, he covered Rhode Island's credit union crisis with a team of reporters and editors at the Journal, and that team's coverage won the Sevelin Brown Award for Public Service, presented by the New England Associated Press News Executive Association. And so he is really a distinguished journalist here and just happens to be an adjunct professor at Bryant University now, which we're very proud to have him here. Ross, come on up. Ross Chait is professor of political science and international affairs at Brown University. He chairs the Rhode Island State Ethics Commission, on which he has served since 2004. Holds a law degree and PhD in public policy from the University of California, Berkeley, and was primary author of Carved in Sand, Gregorian Commission Report on the Collapse of RISDIC, published in 1991, shortly after the failure of the credit unions, and was prepared at the request of Governor Sondland. And John Marion. John Marion is Executive Director of Common Cause Rhode Island since 2008, and he's led many successful legislative campaigns, including reforming the state's financial disclosure system, restoring the full jurisdiction of the State Ethics Commission over members of the General Assembly, and creating risk-limiting post-election audits. And he has been a great partner in this project. Thank you, John. And finally, our moderator, Elizabeth Harrison. She is the news director for the Publix Radio. Some of us used to know it as Rhode Island Public Radio. And over the last 11 years, you may have encountered her in a variety of roles with the station: education reporter, producer, host of Morning Edition, and for the last several years, news director. She started her career with CBS News, but we're awfully glad she landed here. Thank you, Elizabeth.
Good evening, everyone, and let me know if you can't hear me. Cindy, thank you so much for that great introduction. I have to say this particular historic event, it's sort of, as a journalist, the kind of thing that you both dread and dream of, because nobody wants to see the kind of pain that people obviously experienced as this was all happening, and it's a frightening thing. which you're experiencing yourself as a journalist in the same way that members of your community are experiencing it. Of course, at the same time, this was a really juicy story. As I'm sure the panel, we're going to get into that a little bit. So, you know, it has everything: public corruption, the mafia, you name it. So let's jump right in, and I'd like to begin by asking each of the members of this panel to weigh in here. Just after watching that video and listening to that presentation, looking back on all of this, what led to it, what happened afterwards, what surprises or strikes you the most, and what do you see as the biggest lesson for today? And let's see, I guess we'll start with you, John Marion of Common Cause.
Sure. Thank you, Elizabeth. And I want to thank Cindy and Melissa and Gary for putting this together. This took months to put together, and I thought that the film, my contribution was that I had lunch with them and had shared some ideas about who should be on the panel and who should be filmed, and I thought it turned out really excellent. And I think it's going to stand as something that can preserve a unique piece of Rhode Island history. So, but to answer your question, I, unlike the two people to my right, did not live this. I was, I think, graduating from high school when this happened in New York. But I've heard about it, obviously running Common Cause. And I didn't quite grasp the scale of this until really today, in preparation for this, I was going through some of the clips of the Providence Journal and the New York Times and realizing quite how much attention this got on page A1 of the New York Times in January of 1991, and how many people's lives were touched. So when it said over, I think, 300,000 accounts, this is such a small state you know, we often talk about events here, the station fire or so forth, where you might be 1 degree of separation. Every household in the state was probably affected directly by this. And the scope of that is something that I don't think I could even now, understanding it empirically, you can't really grasp as somebody who didn't live through it. So I think, to me, that's the biggest thing I'll take away from this, which is that this was an unbelievable event. As Senator Whitehouse said, you know, this was like an all-nighter for 6 months. It was that intense. So I'll leave it at that.
Russ Tate?
Well, first, boy, I did live through it. There was a Brown University employees credit union, and I had direct deposit. So I had, on January 2nd, no access to the paycheck that I had just earned. And it's a hell of a feeling to be told you don't have access to your money. And if my parents hadn't loaned me money, I wouldn't have been able to make my mortgage. So it was a very shocking thing. So in some way, none of it surprises me because I really, really lived through it. So I'll go to biggest lessons, and I'll give 2. One is, I don't think enough has been said about the General Assembly. I think it's clear in that video that the General Assembly is seriously at fault here. And why are they seriously at fault? Because they deferred to Bob Bianchini. They deferred to the guy in the legislature who represented credit unions. So they gave the store away, is my feeling. And I don't think enough was made of the idea that the General Assembly empowered sleepy little credit unions that were only used to and equipped to do home loans and car loans, and empowered them to do things they had no business doing. Direct investments, real estate investments, and what do you know? They weren't good at it. So the legislature deferred to the person in the legislature who had the interest involved. And that's a problem all part-time legislatures have to confront, and it was an utter failure here. The other thing I'd say is the important role of the Providence Journal. We learned a huge amount about this crisis because incredible resources were put into this, and John will say some more about that. Sure. But teams of people worked on this, and it's sad to say that if this happened today, that wouldn't be true, because the teams of people don't exist. And so I have real worries about sort of, could this happen again? I think our General Assembly could do the same thing, defer to someone in the Assembly who has interests involved. And I think there are fewer watchdogs today than there were then.
And John Kostreva.
Thank you, Elizabeth, and thank you to the Hassenfeld Institute for inviting me. I really appreciate that. And thank all of you for coming out on a cold, wet November night. So thank you for that. The documentary we saw and Dr. Prosti's case study, I think clearly and accurately depicted the chaotic time in the state's history, as I remember it when I was a reporter at the Providence Journal. It was a crisis because it severely affected every Rhode Islander, and it rocked the foundations of many of our institutions. Governor Sondland's emergency order on January 1st, as you saw, abruptly, immediately separated depositors from their money they needed to live on, and they had no idea when and if they would ever get their money back during that first week of January. The demos and the protests you saw on screen that I covered were filled with rage, and it would not have taken much for that to cause riots and violence in the streets. It came very close. I think it was also a crisis because all Rhode Island taxpayers were eventually asked to bail out the depositors. And that came at a time when the region was in a recession, money was tightening, layoffs were starting, and it was becoming harder for all families to make ends meet. And now they were ending up for a credit union crisis they really didn't have a part of. The RISD crisis, in my mind, and some of the comments on the video reminded me, was much more than a financial crisis. Bill Seidman, the FDIC chairman, who actually came to Rhode Island, was an advisor to Governor Sondland, said, "You don't have a banking crisis, you have a confidence crisis." And I think what he meant by that was people here felt betrayed by their institutions, especially their state government, that was supposed to protect them, not hurt them. There was a widespread feeling that there was one Rhode Island for the insiders, one Rhode Island for the people who knew a guy, and the other Rhode Island for the rest of us. And there was a fear among public officials that that erosion of confidence would extend beyond the RISD institutions, and people would start to run and grab their deposits from other institutions in Rhode Island, causing a panic that would spread regionally across the state line into a national crisis. It was a dangerous and it was a chaotic time. The other thing, Elizabeth, that I saw on the screen was people talked about the lessons from the crisis, and Gary Sass mentioned this as well. Again, I was on the financial team at the newspaper, and my job was to figure out what these institutions look like, why there was so much trouble, and then how Governor Sondland was going to get the money back to the depositors and clean this up. And I think there are real good lessons from back then which apply today. First of all, I think he did make the correct decision to close all the institutions. There was a great debate about this at the time, but in my mind, no-brainer, good decision. He took control. He clearly focused his administration on that issue when he had a lot of other things in mind when he was coming into office, because I didn't think he had much choice of that at the time once he closed them. He brought many talented people into government service, young people, new people. He also reached out for help from retired bankers, accountants, financial experts, many that he knew from the business world, and he did reach out across state lines, the NCUA, the National Credit Union Administration, the FDIC, and the Federal Reserve. I think he successfully worked with state legislators to create DEPCO, the bailout agency, and to eventually craft a bailout package. His support for the Gregorian Commission that Ross served on, and the Titus Commission, which investigated and reported on the crisis, was successful. Overall, Governor Sondland gets good marks, but there are a couple of cautions. Sondland was a commanding, decisive, blunt person. Anybody knew that could see that. But he could also come across occasionally as brusque, aloof, and arrogant. And that sometimes fueled the tension with the depositors, especially in those first few weeks, who did not see much compassion. Secondly, the governor took months, as Melissa pointed out with the Old Stone deal, to figure out how to sell the closed institution and to try to balance the needs of the depositors and the taxpayers. It took a long time to figure that out, that he really wanted to make sure that the depositors got all their money back. Yet at the time, there was a lot of information from the national savings and loan crisis, the crisis in Ohio, the crisis in Maryland, that the only way you would solve the crisis was to get the money back to the depositors. Otherwise, it would always be there for that. I think he took a long time to figure that out. During that period, the Providence Journal, under the leadership of Jim Wyman and Tom Heslin, told the reporters very, very clearly, I want you to fill the newspaper every day with as many stories you can produce to give the people the information they needed to figure this out. And second of all, try to understand really how Rhode Island works. And that was the mission. As the reporters did that, at times there was real conflict between the Providence Journal and the governor's office. The governor was involved in a very complex problem, trying to figure it out. He had stages of information he wanted to put at certain times. The Journal's point was, whatever we find out, we're reporting, and reporting it now. No more secrets. And that caused a great deal of contention and a great deal of butting heads. I will say this, though, looking back, and especially when I see the film, there really was mutual respect. And I think this is important. The Journal respected the office of the governor. The Journal respected Bruce Sunland. And the governor and some of the people on his team, and I see a couple in the audience right now, they really understood the role of the press. They understood the importance of the First Amendment and that the Journal was an institution as well. And I think that understanding created a healthy, adversarial relationship. And I think both institutions did their job and did it pretty well. I think for all those reasons, and I think we'll get a chance to talk more, I think the credit union crisis, almost 3 decades old now, is still a rich opportunity to learn how we treat each other, how we do public policy. And I look forward to the comments from John and Ross, and also to take your questions. Thank you very much.
So in preparing for this evening, I had a chat with my colleague at the Public's Radio, Scott McKay, who was a colleague of John's at the Journal. He was a political reporter at the time. And he headed to the State House on January 1st to cover the first day of the Sunland administration. And he remembered that it was a celebratory atmosphere. There were still empty champagne bottles littering the steps of the State House from the parties of the evening before, including the inauguration party. And he had, and his colleagues had no clue what was about to happen. And as he entered the State House and was walking around the halls talking to people, words started to trickle out in the halls that the governor was going to close the credit unions. And so I wonder, Ross, you alluded to this, but could you take us back to that day? How did you first hear the news, and what went through your mind? And I'd like to ask the same question to John, because you were a journalist then. I'm just bring us back there on a personal level. You know, how did you first hear about it? What did you think when you heard it?
Right, I'm not sure I heard about it on New Year's Day. I know it was publicized on New Year's Day. I feel like I heard about it the next day, and I may have heard about it from Gregorian, because part of what happened here was, first of all...
Who was the president of Brown University at the time?
Yeah. First of all, Sunland's
Gregorian.
first act was not closing the credit unions. His first act was an executive order on ethics. That was executive
Correct.
order number 1,
Right.
and executive order number 2 was closing the credit unions. So, and he also then said he wanted Bartan Gregorian, the president of Brown, to put together a group of people to explain to the state in 3 months why this happened. So I was a very young junior professor, and I was on leave at the time. And I studied regulation, so I think I got called by Gregorian that day and asked whether I would participate in this effort that ended up being myself, a guy in the econ department, and the university auditor. So it was a real mixture that day, this January 2nd, because I knew that a bank holiday, and that's what they call it, a holiday, this was the most significant event like that since the Depression. It was a massive event, and it affected my money. But there was also something kind of exciting about it, because now I was going to like work with the president and do a big deal report, and I was just a very young professor. So and then I really spent 3 months just working on that report.
That must have been quite an eye-opening experience.
Well, it was, for me, it was my initiation to Rhode Island politics, and it was my initiation to something I'd been in the state, 3 or 4 years and hadn't paid a lot of attention to. And Gregorian really, part of his view was this didn't just happen by accident. There were structural reasons why this happened. And I remember the Providence Journal headline quoting him using the word incestuous. I would rather use a different word, but the idea of, things are just too close and there are too many conflicts of interest in this state, I think I got introduced to during those 3 months. And many of those issues are still with us.
Indeed. So, John, what about you? How did you first hear about it, and what thoughts went through your mind?
Yeah, well, I just remember, Elizabeth, that the governor's executive order on Inauguration Day was a shock. It was a surprise. I did not anticipate it, and I'll go back a little bit to tell you why I felt that way. But somebody had mentioned to me that the governor's speech was going to make reference to his history as an airplane pilot, and he was going to talk about dark clouds on Rhode Island's horizon. And it was, what the hell is that all about? We knew there was a big state budget crisis coming, which was the focus of the administration coming in September, October, November. But what was he talking about? So very directly, shocking was the first day, shocking. Just to step back a minute and maybe fill in some of the blanks on the screen, because I think this was important. So RISDIC, the Rhode Island Share and Deposit Indemnity Corporation, the private insurer, was pretty well known across the state. It was known because it was a good slice of the banking environment in Rhode Island. If you remember, there were huge RISDIC-insured institutions. Marquette dominated Woonsocket. Rhode Island Central Credit Union in Warwick was huge. In South County, Davisville was a big depositor and lender. Central Credit Union North Providence, that a gentleman told me about before, sort of ran the town in North Providence with Sal Marcini. So RISDIC was very, very well known. It was also known and well reported in the paper that they've had a number of defections. From the time it was founded to the day that the governor closed them, the number of RISDIC institutions dwindled to half. A lot of institutions fled RISDIC to go to federal insurance. And then, of course, during 1990, there were 2 big page 1 events. Jefferson Loan and Investment Company in Cranston failed. It was a RISDIC institution. And that raised questions about the strength of RISDIC. And then you also saw on the screen in November, Heritage Loan and Investment Bank failed. That's Joe Mollicone's bank. And the paper was filled with stories in November and December about where's Joe Mollicone because he took off. How big was the embezzlement? $13 million. How could RISDIC pay for it? Well, they were going to reassess their members and make do, and they were survive.
John, could you for just a minute, let's talk a little bit about Mollicone, because he's alluded to in the video, and you just mentioned him. So really, who was he, and what was his role in all of this?
Yeah, so Joe Mollicone owned Heritage Loan and Investment Bank, a small-sized bank right up on Federal Hill. You heard on the film that his father was Puppy Dog Mollicone.
Yeah, Puppy Dog, that's an interesting nickname.
Well, he was affiliated with the Patriarca mob. Some people say he was called Puppy Dog because, and Tom will help me with this, whatever Patriarca asked for, old man Mollicone would take care of. He was a puppy dog to Patriarca. So there was history of the bank there being a sort of a mobbed-up bank.
And what were the rumors about how the mob was using this bank?
Well, again, organized crime who takes in money from whatever they're doing, gambling, prostitution, the rackets, needs a place to launder the money, to put money through an institution and get it out on the other side when you borrow it out. It was talked about perhaps as a money laundering operation. The other reason, and that became apparent later, is that, and it was on the film as a matter of fact, that a lot of people borrowed money from Heritage Loan Investment Bank. It was a lending bank that made a lot of different commercial real estate loans. A lot of those loans went to people that never paid them back. Money disappeared. And that was the hole in Heritage that became apparent in November and December. And it was $13, $15 million big, which in 1991 was a lot of money. How do you make up that hole in an institution? And if you remember, Joe Mollicone took off. He disappeared for months.
With some money too, right?
Well, he eventually was, Tom can help me with this as well. I think he was eventually convicted of embezzling $13 million. So I think that's on the public record. I just want to finish up with one thing about the predecessor, about what we knew and what we didn't know, because it is a big area. So while we knew those ideas about RISDIC, and we knew about Heritage and the connection, and we knew about Jefferson Loan and Bank, what we didn't know was two things. We really didn't know the depth of the fraud, the depth of the corruption among a large network of credit union executives, RISDIC executives, credit union league officials, accountants, borrowers, lawyers, appraisers. This whole network, this whole banking system was secret, don't remember. The banking records that were held by the Department of Business Regulation, we had no access to them. They were secret. And again, we're a little bit surprised in that first week of January in the chaos, just to start to understand the level and the depth of that fraud throughout these institutions. Second of all, yeah, there were rumors in November and December that there were real problems. No question about it. There were rumors where people started to remove their money. No real reliable on-the-record sources to confirm that. The other surprise was, and you didn't know this until the institutions closed and Governor Sutherland started to release the financial documents, was just the size of the insolvency. We call that the hole, the difference between the liabilities, the deposits you had to pay back, and the assets and the loans to cover it. And in that first week when Sutherland released the documents, we looked at them, and about 12 institutions, the hole was like more than $500 million. In 1991, that was a huge amount of money. Where did it go? And then the question came up, how is there any way we're going to fill that hole? How are you going to pay it back? Which came with the bailout. Long-winded answer, but let me stop there.
Ross Chait, can you fill in a little bit of just the details on how did banks that started out, like the credit union in Woonsocket you mentioned, started out as a sort of a place where residents could pool their funds so that they could buy everyday things like dishwashers, things they couldn't afford because they couldn't get loans from a regular bank. How do we go from that to a system that seems to have been sort of a house of cards that could all topple like this?
Well, I think it really parallels what happened with what's come to be known as the S&L crisis. And in the S&L crisis, it was savings and loans that were federally insured, and so we all automatically paid the cost of that one.
We being taxpayers.
We being taxpayers, right. But the same thing happened with the S&Ls, which is they were sleepy institutions that were set up to make home mortgages and car loans. And so when they got authorization to do much more sophisticated and high-risk things, they weren't equipped to do it. Now, the thing that I do want to add, I agree with you, many people didn't know the extent of the fraud, right. But DBR did.
DBR.
I saw the Department of Business Regulation. So one of the things that we did get in the Gregorian report was we got access to the DBR reports of these credit unions.
Is this the State Department of Business Regulation?
The state did examine them. RISDIC was supposed to regulate itself, but DBR had a role here. And I think Sheldon kind of downplayed that in the tape. Sheldon says, oh, if you ask the DBR people, they would tell you. Well, the fact is DBR knew. And the DBR reports made it clear that about 6 of these were in terrible shape.
And who had access to those reports?
The state regulators knew. And so again, people in state government didn't act on that information. But it was there.
And I'm curious, there were changes made after this crisis happened and some changes to ethics rules and oversight of banks. Some of them were mentioned in the presentation. Everyone has to be federally insured now. But I'm wondering, and maybe we'll start with you, John, do you feel satisfied that the changes that have been made are enough to stop something like this from ever happening again?
So, the fundamental conflict that was discussed in the film was that you had I guess there were several fundamental conflicts. One was that RISDIC was governed by people it was overseeing, which was a structural problem that was allowed by the legislature. And there was this fundamental conflict that a member of the legislature was also an official of one of the credit unions. And I don't think that necessarily would be allowed to fester today. I think we have the ethics oversight, and Ross is in charge of that to some degree, in the jurisdiction to deal with that. I will say, though, I do think you still have this problem of what we heard about DVR. You know, if the politicians don't want to hear the bad news, and DVR ultimately is part of the executive branch, the politicians are going to close their ears to the bad news. And so it may have been that they were doing the auditors at DVR were doing a good job, but ultimately they're accountable to someone who's elected, and if someone who's elected is listening to their campaign contributors and wants to ignore the auditors, they're going to do that. And I think in our system of the way we fund campaigns and a whole bunch of structural problems with how our democracy works, that's still going to happen. And I think it still happens to this day. I think, I'll be the first person to say 38 studios. Part of that deal was people not wanting to listen when the wiser people in the room spoke up and said, this is a bad deal. And for a variety of reasons, they wanted to go ahead with this because they thought it was a winner politically. And it sounds like this was that on a far grander scale.
What about you, Rushchite? Do you think that what has been changed is enough to make sure we don't have something like this happen again? Or could it still happen in this context of a financial institution or some other context? You mentioned 38 studios, so maybe I answered the question.
I don't know anything about Bitcoin. Do you understand Bitcoin? I don't think anyone does. But I know that I read in the Providence Journal that all of the top politicians in this state were at a conference telling Bitcoin people from around the country, come to Rhode Island because we won't regulate you. And I just think, yes, it could happen again, because if you're willing to ask people to come to our state because you're not going to regulate them, that's exactly the recipe to have this happen again.
And to what degree does it relate to just perhaps legislators who are not well informed enough about the people they're supposed to be overseeing? I was talking to John about this idea. Are naive about it. I mean, Bitcoin's a good example. Few people really understand that well.
I think what you need, one piece that you need to avoid this is some professionalization at the legislature. You need some ability to analyze things, not just on let's ask Bob Bianchini. And if they really had the professional capacity to do real analysis, and I don't know enough about whether that's changed. I think maybe it's a little better now, but I think that's what's needed at the legislature is some capacity to do real analysis of complex issues and not just rely on the guy who you think knows a lot.
And not just to piggyback, not necessarily having legislators be better informed because maybe they're full-time, but they're the staff capacity.
Yes.
And that's a big hole, I think, in Rhode Island, is that the legislative staff is at will and politically appointed, from the person who sweeps the floor to the top most senior fiscal analyst and policy aide. And so when you're an at-will employee like that, you sometimes, when push comes to shove, are going to give the boss the answer that the boss wants.
I have so many questions, but I want to make sure we get to some of your questions too. But before we do, I want to touch on how this might all play out today, starting with you, John Kostreva, and the journalists involved. In today's era of the internet, social media, and smaller newsrooms, how do you think something like this would be covered today, and how does that compare to the way that you covered it at the Journal at the time when this was all happening?
Yeah, it's a good question. So one of I think the clear takeaways from watching the film and listening to Dr. Prosti's case study and then the comments from my colleagues so the free flow of information has to be a critical part of any democracy. And that may sound pretty basic, but again, looking back to the credit union crisis, that was such a complex financial quagmire. The appetite for people trying to figure out what happened, what was my state government doing, how come I can't get my money, what is this going to cost me to bail out my neighbor? The only way people could understand that is if you had an organization, an independent organization of unquestioned integrity that was there to provide objective information of local, state, regional, and national interest to the readers who buy the publication. That's pretty basic. I also think, as I mentioned before, that if we no longer believe that free flow of information is so important, and that the First Amendment is so important and critical, heaven help us. Because I don't know how it works. I don't know how anybody believes anything. So when Elizabeth asked me about social media and the changes, social media, a wonderful thing. I was in the Kreppel Library about 3 weeks ago doing some work, and all of a sudden about 15 phones went off around me for the students. There was an alert on the tornadoes that touched down in Lincoln, and immediately they had information about where the tornado had touched down, what the path was, am I in danger, what should I do? Wonderful tool. Those same students that have heard their phone go off, I have them in class at Bryant, and they are loaded with information on their phone. They have all the great libraries of the world right here. But the problem is they have a hard time discerning what's credible, good, solid information, and what's right and what's wrong. It's a challenge. And that's before you get to the whole idea of fake news, where people actually put information on social media to motivate it to cause problems. Heaven help us during the credit union crisis if we had bad information out there immediately, and then somebody had a motivation to scuttle something or do something that people were believing, a real problem.
How did you, though, I mean, also, just as a journalist covering, you're not like the 60 Minutes reporter who parachutes in, does a report, and leaves. You're somebody in the community, your colleagues, your friends, or your family, or your colleagues' families, they're all affected by this. How does this impact the way you look at the story and the choices you make about how to cover it?
Yeah, well, I am a member of the community. I think that's our strength in Rhode Island. Good, solid people work at our media institutions and do the job to be objective. And just to finish up with the first part of your question before, it's the question I've been asked 10 times this morning already, people who I've been introduced to. How would the Journal cover this today? How could they possibly do it? It is a very, very good question. I would say this. There are still many good, excellent journalists at the Providence Journal. Excellent. There is a bigger newsroom at the Providence Journal than any other news organization in Rhode Island. That's good too. Are there the resources now that were there in 1991? There are not. Same thing that's happened to every middle or small-sized newspaper in the country has happened to the Providence Journal. We've gotten a lot smaller. I left when the new company offered me a buyout, and I took it. It was time to move on. I would just leave you with this final idea. If you think the free flow of information is important, if you think local media is important, because I think there may never be another credit union crisis, I hope not. There'll be another scandal. Something else will happen. If you believe that's important to you, we better figure out how to deliver local news on a statewide basis. And I always thought, what's neat about Rhode Island? I moved here from out of state. State of entrepreneurs. This is where Royal Little created the first conglomerate in corporate America that everybody embraced. Slater Mills. We figure things out here. Why can't we figure out how to run a local statewide news organization and make it work? So when a crisis pops up, you can figure it out. I think that's the challenge for all of us, especially those of us who have been around for a little while. How do we figure that out? Because I think that's critically important to who we are, critically important to the democracy.
Sure, Russ, yeah.
I want to say one quick thing about private universities. They're not substitutes for the media at all, but the reason that the governor turned to the president of Brown was he thought, if Brown produces a report, people will believe it.
Right. And what do you see as
so I think sitting here at a private institution, and you couldn't, and this is not a criticism of the people at URI. URI couldn't do that. So the private universities in this state have a role to play too. And I'm always pushing mine to get involved and care about Rhode Island, but I think the public education that's happening here tonight, it suggests a role for private universities that can contribute to the analysis of public issues.
I want to ask a follow-up question there, though. I mean, we've heard calls, especially after 38 Studios, for a similar commission to investigate what happened there. And so I'm curious, based on your experience studying this crisis, what are the pros and cons of that type of approach?
Well, it's very disappointing to me that the legislature never did the kind of investigation of 38 Studios that they did here. Not only was there the Gregorian report, the General Assembly took this seriously. They brought in high-powered DC lawyers and held televised hearings and produced 4 volumes, and we learned a lot. And the idea that that didn't happen in 38 Studios, I think, it does not speak well for the state.
Now, John Marion, I saw you shaking your head a little bit as John was talking about, what a wonderful tool social media can be. So I'm curious what your perspective is on, how something like this might play out in today's era of constant communications.
Yeah, and I don't think it'd be any surprise that I'd echo his comments that I think this would have been a much different crisis today, both because there would be less information from trusted sources as well as more information from unverified sources. And it's trust. Watching the film, I keep thinking about, and I didn't know Sondland, and I wasn't here for his governorship, but people speak about how powerful a force he was as governor in this weak governorship. So my organization's worked a lot on issues related to sort of the weak governorship in Rhode Island. Yet here's somebody who took that weak governorship in a time of crisis and really sort of pulled us out of that as a state. And I just have to go back to, I think it was because even not that long ago, people still trusted government more than they do today, and they trust bigger institutions. So I wonder, would they turn to Brown, right? And would they be skeptical of Brown in the current environment because of the lack of trust of large institutions that I think started before the credit union crisis, started in the late 60s, early 70s, but continues. That decline has accelerated with social media, and what would that mean? Would a leader be able to emerge to pull us out of this, or would they not have the trust of the people, and worse things, the rioting or whatever, would happen?
And what do you think, I heard some comments such as this credit union crisis made people feel there were two Rhode Islands, one for people who know a guy and one for everyone else, or the sense that there are just too many conflicts of interest in government in such a small state. And I still hear that from people who I interview all the time. So has that changed at all? In both in terms of the reality and the perception of it?
Well, go ahead, Russ.
Well, I've always said Rhode Island has a 2-degree of separation problem, and the state's no bigger now than it was before, so I think we have a real challenge in such a small state where people are so connected. And in some way you can't get away from that, but you can certainly try to, in some ways, regulate it.
Yeah, I would just say that the culture has changed over the years. Things have changed, a lot of reforms. It was interesting after the credit union crisis, the coalitions that formed among the churches, among the politicians, among a lot of different people to push for a 4-year term for governor, so they're not running every year. Banking laws, insurance laws were reformed. A great deal happened in that period. And that idea about Rhode Island being so small that everybody knows each other and it's a hothouse culture and it breeds corruption and whatever, the other side of that is that, and we've had good successes from them, when people pull together to do something jointly, stuff happens. I was very interested in the case study by Dr. Prosti when she talked about Rhode Island had to borrow $600 million to pay for the principal, the interest, and the overhead to bail out the depositors. $600 million. At one point, they were borrowed up. Where else was it going to come from? It couldn't come from the debt service in Rhode Island. They went to the federal government and got a $125 million federal loan guarantee at low interest rate. It's the only way they could have made that work. Well, how did that happen? You had a Republican president, George Bush, Republican administration, Nick Brady was running the Treasury Department where they got the loan. You had Rhode Island's 2 senators, a Republican Chaffee, a Democrat Pell, the 2 congressmen, a Republican Makeley, a Democrat Reed. And what were they doing? They were trying to raise $125 million to bail out a Democratic governor who was about to run for re-election next year to take over the state. That's a small state bipartisan cooperation. What do you think the chances of that happening today? One of the lessons, I think. So that small idea, when it works, is very, very powerful. When you put people in a room together, you can get things done here in Rhode Island. You really can.
Okay, I know we're running low on time, so I want to make sure we get to some of the audience questions. And it looks like there's a microphone there. Here, this gentleman up front. They're coming.
Thank you. I thought that I enjoyed the movie. However, I really appreciate some of your comments, and specifically has to do with the legislature and whether I think this will happen again. It brings to mind a famous statement by a jurist of Britain who said, "We do not hang horse thieves to punish them. We hang horse thieves to prevent horse theft." And I just wondered, in a nutshell, if you could tell me, did any of these legislators or any of these people, except Young, the accounting firm, did any of them, other than Joe Malacone, suffer jail or anything for this? I mean, that's what I think is missing in Rhode Island.
Right, we know the taxpayers suffered because they had to pay an extra, was it an add-on to the sales tax to help bail out the depositors?
As I remember, and I could be corrected, I don't remember any public official being indicted or go to jail for the credit union crisis. Somebody could maybe straighten me out on that, but I don't remember any public officials. Now, there were RISC officials who were indicted. There were credit union executives that were indicted. Elizabeth Wright, there were a number of civil suits against the accounting firms and the law firms and the players in this system that allowed it to be perpetuated. And there were big settlements from that. One reason why the credit union bill, which started out at $690 million, got paid back was the civil recoveries. But if that was your question, I don't remember public officials ever serving any time.
So even with all the commissions and the investigations, the result in some ways was not unlike 38 Studios, where no public officials have been found or indicted in connection with that.
Well, I just want to say I don't think indictment and criminal prosecution is the only form of accountability.
Right.
That's a form, and it's sometimes, I mean, to me, accountability can mean that we have learned what you did, and in some way, you know, you're held accountable in the court of public opinion. And so that did not happen in 38 Studios, and to some extent did happen here. So
Where people were voted out of office.
I mean, I think there's accountability in investigations. And I think we're going to learn some about that in Washington in the next 2 years.
And accountability at the ballot box, which is, none of those characters rose to higher office in Rhode Island. But I think, Melissa, did you have a...
I was just going to say a lot of the elected officials did not win re-election the next time around, and that was pretty huge. There were a lot of folks did get in trouble, but it wasn't so much public officials. It was folks who were working in the credit unions. There's a pretty long list of people that were affected, although none to the same extent as Malacone.
Any other questions?
The last sentence in this report mentioned STEPCO and the cost of the crisis, $290 million. I hear some higher figures over there. When are the DEPCO records going to become public?
That might be a question for Melissa.
Yeah, right. I don't know anything about that.
So there's different numbers when you talk about like the net bailout versus the amount of loans that were taken out from there. In terms of the DEPCO records, they are available. That's how I was able to view them.
The cost is mainly from loans forgiven. Everybody got paid back their money.
Almost.
But all the loans that were made, what happened to that money? I recall when
You mean the loans that were not paid
Yeah.
back?
Pardon me?
The loans that were not paid back by borrowers?
Yeah, and the compromises.
Were any
that
of the
were made by
borrowers held
DEPCO.
responsible for the loans that they failed to pay back?
Well, like I said, there were a lot of individuals who did get in trouble, who were involved in the credit unions because of fraudulent loans and other similar kinds of illegal activity. But everyone did get money back eventually. It took a long time to do so.
And what about, just to piggyback on that question, what about, people who, they didn't just lose the money temporarily. They may have lost their businesses. They may have had to declare bankruptcy in the time that it took to sort everything out and to get access to their funds. Was anything done at the time to help those people or bail them out?
Yeah, I don't remember. The small business question was also in the video, and it was traumatic for a lot of small businesses across Rhode Island because, of course, your account at the credit union was frozen, which means your liquidity, your cash flow was no longer available to run your business. And then, of course, because so much money was frozen in the institution, that money the depositors would have had to spend at small businesses, to go to the cleaners, to go to the auto repair, was not available as well. So a lot of small businesses suffered, and a number of them failed, which, again, at a time of recession, just made the whole economy worse. I don't remember to answer the question whether there's any specific relief for small business people specifically.
One thing that does come to mind is that the state did set up a mortgage assistance program for residents. Something to keep in mind is that the threshold to be able to participate in that was quite dire. It was very difficult in order to be able to qualify, because you had to already be in dire straits in order to get it. And so a lot of people were not immediately in dire straits. It would take a little while for them to arrive at that point. So that is an example.
And if I could just raise one final question on the cost, because in doing a little bit of research before I came tonight, so Gary Sass, for example, who was involved with the Rhode Island Public Expenditure Council and doing some advice at that point, made a couple other points regarding the cost. So to answer your question, it started $690, that's what people borrowed, but then after all the recoveries, all the principal and interest was paid, the $290 number comes out, which is what Dr. Prosti writes about. But let me just mention what the other finding was. Besides that financial cost, okay, of real dollars that people paid, when you borrow that amount of money in the state, it means you can't borrow for anything else. And at the time, Rhode Island per capita had one of the highest per capita debts in the country. And so when David Preston says on the film, we had this whole bigger agenda to do infrastructure and everything else, you were borrowed up at that point. So you had to put off any project for infrastructure. There was an agenda for education. It was pushed way back. Economic development projects pushed way back. Some people say that Rhode Island, coming out of the 90-91 recession, and that was a regional recession, started so far behind, we still have not caught up to where we would have been if we did not have to go through a credit union crisis.
Okay, I see it's just about 9 o'clock, so we're close to the end of our time together. I see one more question. Is it all right with the panel if we take one more? Okay.
The point I was trying to make, and I did a bad job, was that we do not know to this day the compromises that were made the deals that were made with the people that owed money. We know people got paid back. Those are the records for the people who borrowed and had their debts compromised.
I think you think like a journalist. We could use your help in the journalism profession. Okay, last question here.
Yeah, one thing I didn't hear referenced in the movie or in any of the discussion is that in 1990, we were at the tail end of a huge real estate boom in Rhode Island. If you remember the years 85, 86, 87, property values were doubling in maybe a 2-year period of time. And that might explain to some degree why the appraisers were just thinking this was going to go on forever, even though there was evidence probably by 1990 that the bubble had burst. But didn't we just relive this again in 2007, 2008, for different reasons, but on a hugely national level? And it makes me wonder, have we learned anything?
I think that's an excellent question.
Well, I think what you're asking is, you know, how do you get cooler heads to prevail when real estate prices are going way up? Because I think one of the, you know, these credit unions wanted in on that, and when the market's doing real well, everyone looks good, right? So I think that is one of the problems. I did want to mention someone who wasn't in the video, who was a public servant who saw this as a problem, who was the treasurer at the time, Nancy Maher. She was all over that Jefferson one, and people wouldn't pay attention to her, and I'm thinking of her because the treasurer is here tonight. Seth Magaziner, great to see you, and I know this would never happen under your watch.
No pressure. Well, thank you so much to the panel. You've been so wonderful, and your insights are just fantastic. Could you give a round of applause to these three?
And thank you, Elizabeth. Thank you to all of you for coming. I want to reiterate that this is the beginning of a conversation, not the end. And I encourage you to email me personally any of your reflections. Email me your questions, and I will do my best to get your questions to someone who could perhaps help you by answering them. My name is Cindy Elder. My cards are out on the table. And thank you all for coming. Stay and continue the conversation. Thank you so much.
Yeah, the Jim Propashanti one, for example, the downtown hotel. So
Right,
we
so
do
I
know
think
a lot of that.
what he's getting at is we settled with people we probably shouldn't have.
Yeah.
Right, that there's more money could have been squeezed out of these people, and that's probably true.
I think that's exactly
Yeah,
right.
right, well, that's a
Enjoyed your
hard thing
comments.
to do.
Thank you. Very nice meeting you.
Very nice to meet you.
Great job. Really kept it moving. Very good choice. Excellent.
John.
Yes.
Jerry Leverly. I
yes.
just want to let you know, I've always enjoyed your work.
Very kind of you. Very kind
I
of you.
worked at Old Stone Bank.
Oh,
during
yes.
that period, and we went out and did a lot of due diligence
Of
on
course.
those institutions. And
Yeah.
of course, Ted was
Ted
involved in
Robbins.
it. I've got one story.
Yes.
I guess I can mention, we went to Rhode Island Central Credit Union, Jefferson Boulevard.
Yes.
And this was like the first week after. We went out with the FDIC. And we were our goal was to determine how big the hole was
Right.
in each one of these places. And I did the consumer loans at the time. I asked the